It's interesting because it seems like there's been this sudden change in sentiment. We saw an IPO pulled this week already. Is this conflict enough to materially change how companies are thinking about IPOing?
I don't think so. I mean, there's always going to be geopolitical events happening, and the political framework is always going to continue to evolve. And if you're a good company, you can always go public. I mean, you look at the volatility we saw in 2022, 2023, 2024. We had some amazing companies go public and do really well, raise a ton of capital to fund their operations, to build R&D capabilities, and they're trading at levels that are multiples of where they IPO'd. You look at a company like Reddit, for example, that IPO'd around this time in 2024. It's done extraordinarily well. So I think companies need to be mindful of how anything that's occurring on the geopolitical landscape is going to affect their businesses in the short term, medium term.
What's more difficult, Lynn, or what's the thing that kind of makes you kind of want to pull your hair out? Is it the geopolitical? Is it stuff out of Washington? Or is it the constant and increasing growth of private markets that allow companies to stay private longer? Like, it's pretty staggering.
I think the thing that makes me want to pull my hair out is, the narrative around what we could do to fix the fact that companies don't necessarily see a quick exit in the public markets. If you take a couple of steps back, our public markets are the envy of the world. You look at the amount of capital that gets raised there, secondaries, IPOs, whatever the case may be, it's extraordinary. It is why more and more companies are looking towards the U.S. as the most desirable geography from a capital formation standpoint. When you think about why a company isn't going public, a lot of times it is the areas that Chair Atkins covered in his Make IPOs Great Again speech. Simpler disclosure frameworks, looking at mitigating some of the litigation risks that face public companies, those types of things, significant shareholder reform, proxy reform, things of that nature. That's really what keeps companies off to the sidelines.
Is there something, though, Lynn, to be said that by having, though, a pretty deep private market and allowing companies to stay private a little bit longer, that when they finally go public, they're a much healthier company?
Absolutely. Absolutely. I've been saying this for years. Companies being private for longer, that's a great thing. Because, to your point, when they come out to market, they have refined their strategy. They have a very clear path towards profitability, or they're already profitable, and they're ready to take that next step in diversification of shareholders.
What about ending quarterly reporting? Does that prevent
blasphemy?
Well, I mean, the president pushed for that in the fall.
I know.
The SEC chair is looking to fast track it. What would that do in your view?
It's a bit of a two-edged sword, because what does eliminating quarterly reporting necessarily mean? You don't want to give people less transparency around financials.
Oh, we hear you there. That's like our job, right?
But if you're a newly public company, should you have to report your first earnings call within 45 days after you've IPO'd? You've just given investors a very clear forward guidance and a clear look at your financials. What really changed over those 45 days? So I think there's probably a path forward that makes it less punitive but doesn't sacrifice the transparency. And potentially something we've advocated for is, if you're a newly public company, maybe you don't fall into the quarterly reporting cycle immediately.
So it sounds like you are a fan of quarterly reports. I am, and I think I don't want to speak for you, Carol.
I do. I mean, I often think about how it sometimes is frustrating for companies because, look at the AI build out or different things that might be transformative or are transformative, that in order to spend money, it's going to impact you, in terms of your balance sheet. So where do we kind of give some leeway for people to do this, right? But I also do think we have seen things go wrong. And so I love, like you said, the U.S. market, it's deep, it's liquid, it's incredibly transparent.
And that's why it's the envy of the world.
And it's the envy of the world because I think of that.
Right, but a silver bullet is not necessarily, okay, decrease the amount of transparency you're given to investors. Although I do think there is a role for less frequent reporting for the newly public companies, but then also what are you reporting? How are you reporting it? And does it look like a quarterly earnings call or does it look like just a simple financial update?
Can we talk prediction markets?
Please do.
Okay. So the
excited to.
NASDAQ is working on yes-no contracts. We saw this news break yesterday. Our colleague Kat Doherty reporting this. You have a Polymarket investment.
Yep.
Give us an update on how that partnership is going. And I'm curious if you would consider just doing prediction markets yourself.
Yeah, I mean, if there's a regulatory framework that allows for us to do it, we absolutely would look at that as an opportunity. But to your question, your initial question is our investment in Polymarket. The partnership's going incredibly well. We announced an investment in Polymarket about $1 billion last fall. It was really focused more on the data side and giving transparency, particularly when you look at how the data is impacting your more traditional markets. Great example is, which I love to tell people, is I was on the floor on election night. And I remember looking up, and you've been to the New York Stock Exchange, you see all the technology and market data that is broadcast every day from there. And I saw the market starting to spike up. I said, well, what just happened? The S&P futures in particular started to spike up. I said, what just happened? And someone said, Poly just called the election for President Trump. And that was more like a double click moment, like, oh, interesting that the prediction markets are influencing what is occurring in your more traditional markets. You look at everything that's gone on this past weekend, the Strait of Hormuz, which we've all been focused on. How is that impacting energy markets? Our parent company is the leader in energy futures contracts. So what you see on Polymarket around news and sentiment around the Strait of Hormuz is impacting what happens in our energy markets.
Just got about 30 seconds. It's become, though, more than just, there's a lot of sports and sports gambling that still happens on these marketplaces. Does it change? How does it change? How quickly does it change?
So our interest in Poly was because it wasn't as focused on the sports betting market. It's more focused on the geopolitical. They were a little bit different when you look at the markets that they had operated.
Okay.